All right. It's Jared here from Crypto Plan. How's everyone going? I hope you're well. We're going to talk about weight of evidence today. Are we in a bull or a bear market? Alrighty then, let's get straight into it. And if you like these videos that kind of just, I guess, zoom out a little bit and just kind of look at the real evidence on the charts, not just the death cross on the Bitcoin chart, one piece of evidence. Let's look at everything and let's look what's going for Bitcoin and what's going against it, because Bitcoin is the market leader. And you can see here I've got the CFDs, the gold chart up there and the Bitcoin chart, because I'm going to compare them, because just like gold leads and then, silver, mining stocks follow, when Bitcoin leads, altcoins, Bitcoin miners follow, right? So they've got a similar thing, and they're both in the space of hedging against inflation, hedging against, currency collapse, all those kind of things. So they're from a core fundamental aspect, they are very similar, even though people argue till their deaths about how they're different. But you can see the charts there, they're very similar, right? They have bull markets and bear markets, right? So we're just going to look at it from the basics of the chart. So yeah, like the video if you like these sort of technical analysis. All right, so like I say, I've been learning lots of new things from my mentors in a masterclass on the weekend, and they talk a lot about weight of evidence. So it's not just about going, Bitcoin to the moon because Elon Musk bought it, or, whatever the single reason is, and sometimes that works, sometimes that's the straw that breaks the camel's back, and, things can go higher, but you've got to look at the weight of evidence, right? So yes, you've got the fundamentals, safe haven assets, but that doesn't mean, based on fundamentals, there's several occasions where, you could have bought gold and Bitcoin, at the top here. If your timing's out, that fundamental use case is the wrong time to buy. So we've just got to ask ourselves, if we bought now, would it be going higher or not? And that's the simple reality of it, because that's going to determine obviously the price of Bitcoin, the price of the Bitcoin miners, and the price of the altcoins, right? Because Bitcoin essentially is the index. So we have very little data on these charts. We've got a yellow line, which is a 12-week or a yearly moving average. So we can see that, for gold, from this bull market here from 2001, when it kind of broke out above that yearly moving average, it fairly held it the whole time, right? It didn't close below it, except for once halfway up, right? So once about halfway up the bull market, it kind of gave us a scary moment, dipped below, but made its way out again to the top of the bull market. So, like I've been talking about in crypto, there's a crypto half time. There was a half time in the gold bull market there, and I'm sure everyone was panicking at that time, if you're invested in gold mining stocks, right? Goes all the way up, breaks down below its yearly moving average and finds, a struggle from 2013 all the way through to 2016 to ever be above the 1 year moving average, then kind of breaks its way above it and then goes into that stage one where it's, hovering above and below a moving average, the sideways accumulation, and then it breaks out again in the 3rd of December 2018. And since then, it hasn't closed below until recently, so is this another kind of little half-time moment in gold, So we'll have a look at that. Go into the Bitcoin chart, same yearly moving average, weight of evidence, broke out in 2015, never touched that 1 year moving average, never closed below it, went all the way up, all-time high, and then kind of closed below it, bear market, tries to break out, hovers along it once again, and then you probably say from July onwards, it's been in a bull market, right? So it never touched, never closed below that 1 yearly moving average. So we're at that now. We haven't closed below the yearly moving average. So the yearly moving average for gold, for Bitcoin, holds true, that during a bull market so far, according to last run, and, even this run down here, it never closes below the 1 year moving average in a bull market. So that indicator is giving us one piece of evidence. And just one thing I want to kind of touch on is that you don't always have to stick to the common. And this is what the lads that I was doing the workshop with that was telling us. You don't have to stick to the common moving average sequence, right? Everyone might do 1 and 3 year, or they do 50 and 200 day. So I was challenged to kind of to adjust that moving average to suit the market, right? So if we kind of move that along and go, okay, when does that line in a position that it never closed below, right? So there you go. So a 3 year moving average. So it never closed below a 3 year moving average, and you would like to think that that would be the next indicator of how far the gold bull market will go. So you can see there, once again in March 13, it crossed below its 3 year moving average, never got above it until February 16. So it's the same kind of set of data. It's just now saying that here's a line that gold never closes, or has never closed below in a previous bull market. And for Bitcoin, we can probably leave it as that 1 year moving average for now, based on the last sets of data. Another thing we can do is we can zoom right out and we can say, let's go to 3 month candles. Sometimes, to get a good picture of the entire bull market. So yeah, on gold, 9 times 3 months, or 27 months. So it never closed below 27 month moving average during a bull market. And then you can see, once again, it did close below it. That was the end of the market. And then it still hasn't closed below that now. So, gold is still in a bull market, even though it's had a long and drawn out correction. So it's a bit trickier on the Bitcoin chart, because things move a little bit quicker. But, we can say here that maybe six times 3 months, so the 18-month moving average there, so it never closed below. So we are definitely still in a bull market. When you shift the moving averages around, so it's different evidence, it's a weight of evidence. So if we go by the standard definitions, and what everyone's using, that's trying to fit into all markets, then yes, maybe we're getting close to some fear zones. But when you shift it to suit the market, you can see that the evidence is there to say gold and Bitcoin are still heavily in their bull markets. They're just in, longer drawn out corrections. Next piece of evidence. So we're back to my weekly chart. And, we've got this kind of channel here. And the fact that we're, from a time perspective and from the channel perspective, we're nowhere near, a finishing position of a market, right? So I would expect that the Bitcoin price is going to end in kind of a parabolic, pointy top thing like this, and two, it's going to end somewhere near this upper edge of this channel, right? And then we've got the time factor as well, that we're, from that 4 year cycle, which is from here to here, we are not we're not close to it at all. So from a time perspective, so we've got the fact that moving averages have held strong compared to other bull markets. We can change the moving average to suit the market and say, yes, this is definitely it never closed below this and still hasn't to this date. So you can do that, and then you can say, where are we from a time perspective and a structural perspective on the pattern. So pattern-wise, 2013 parabolic top touched, created a point. 2017 parabolic top created a point. That's a trend line. We're looking to somehow confirm a third touch on that's the upper edge of the progression of Bitcoin. So we're in the middle here. For this to kind of fall down from here and go below that line would be rather odd from my perspective. But, it is a piece of evidence and it's possible, right? And I just want to look at one more piece of evidence that, so from a time perspective, once again, June 2017, we saw a decent correction. It wasn't a 50% correction, but it was a decent correction. So this is about the time where Bitcoin starts to cool off, peak up, cool off again, right? So And I just want to draw your eyes down to the distance from the 30-week moving average. Now, it doesn't matter if it's the 30-week moving average or not. It's just showing you here that about there at that level is when Bitcoin corrected. So once it got 130% from the 30-week moving average, it corrected. And then it got close to it again halfway through the bull market, and it pulled back again, right? So until the parabolic top, it never really wanted to be above that 134%, and then it went up there. So we've got kind of another level there of 257% from the 30-week moving average for the top. Now, if we pull forward over to the future and in recent times, that why did Bitcoin correct? So in January, it tipped above that 134% from the 30-week moving average. So it pulled back a little bit. Okay, so it cooled off a bit. It didn't cool off enough. And then it went back up again. So on the 15th of February, it tipped above that level again, and it cooled off a little bit. But then, this market, people that play in this market realize that. They draw these lines and they go, do you know what? For the third time, it hasn't cooled off enough from that level, from that 130 odd percent from the 30-week moving average. This thing needs to cool down. This thing needs to cool off. And I think because it spent so much time up there, so bullish in that zone, it really needs to cool off, right? So once again, you've got historical evidence of distances from moving average that cause corrections. Evidence here that this distance, when it was overshot, 1, 2, and then it was tapped again, a correction was, the next result, right? So that's another piece of evidence. And I guess the final piece of evidence, and this is purely speculative and something that I was thinking about recently, only because it's happened to me, right, is that I saw some of my altcoins, and I have, goals of, taking some money out and buying things, but I got greedy and I thought, and in particular, it was EOS. EOS got to $15, and I was like, do you know what? I reckon it could go a little bit higher, and then I'll take some profits on it, and I had the finger on the button going, I'll sell, 200 of them or 300 of them or whatever, take some profit off the table. And then the crash happened, and you're left going, why didn't I do that, right? Now, I was doing that with no real need. I didn't need to go on a holiday. I didn't need to buy things for the kids. I didn't need to pay for anything. I didn't need, didn't have bills to pay particularly with it. But yet, I still had to sell some a little bit lower, to pay for some other things because, essentially, when you're putting all your money into investments, eventually you're going to pull some out, right, to actually do things with that money, right? So you've got to think about the world as a whole, or the people that are investing in crypto as a whole. And in general, people have made investments back here, back in August, June, July, August, September, October last year, that have matured and got to a point and they're like, do you know what, this market's hot, I'm going to pull my money out. And what time is it of the year in the Northern Hemisphere? It's summer. People are going on holidays. They're doing things that require you to spend money. Lockdowns are coming out, like your average daily spend starts to increase, So all this time period here where this thing was super bullish because people didn't go out and weren't doing things, their money was compiling, all the checks we were being given that were getting put into crypto, they were just going in and in and in, pushing that price a little bit too high. And then people are like, do you know what? I'm going to take some profits. I'm going to take some money and do some things in the real world with the money that I've made, because if you're 5 or 10x up on your money, what better time to take it out, right? Now those people are going to have their summer, come back here, July, August, buy back in, and then they can take advantage of the next run, right? So it's another kind of, it's a guessing piece of evidence, but it's a piece of evidence just to say that we're not in a bear market. There was a large profit-taking zone because people made a lot of money and they weren't going out, and then it was winter, and then now it's summer and they want to take profits and spend money, and that's normal, that happens in markets, and we can probably see that in all sorts of markets, in the stock market that is cyclical, from a quarter-by-quarter basis, and different things happen in summer, different things happen just before tax time. So, these are things we need to be aware of, that the market is just a representation of the psychology of the participants as a whole. So, the participants at a whole are in a point in time where I guess they're exhausted. They don't want to buy anymore. They want to sell and they want to take profits. So that is fine. So is it the time for you to buy right now? Probably not, because it can still go down, because even if your trade was up 15x and then it's gone down, it's only 5 or 6x up, and you need the money, you're still going to sell. Even if you miss the top, you still need to sell if you need the money. So there's probably still going to be a bit of selling pressure, a little bit of sideways action. So let's wait till it gets above that 30-week moving average to really go aggressive on any other trades. Well, that's the way I'm thinking about it. Or at least see some positive momentum to the upside with volume on Bitcoin, just so that our altcoins can follow along as well. And just finally, once again, just having a quick little peek at our total altcoin market cap, and we're just tapping on that 30-week moving average. So hopefully we use that as a bit of support and stay above it and kind of bounce off it. Total market cap, including Bitcoin, yes, has dipped below it, but the 30-week moving average doesn't mean a bull market has started. It just means watch out, like maybe risk off and then let it get it back above it, and a continuation of stage 2 will fold out, and we can kind of enter the trades aggressively again and start to take advantage of a little bit of leverage. So that is what is going on from my perspective. That's what things are doing. We're looking around at the weight of evidence, throwing in a little bit of the China fundamental stuff that's going on right now. Is that evidence? I don't know. I think that's just news. I don't think that sort of news is particularly causing any of this stuff to happen. I think the reality is that we made money in crypto. We sell crypto and take profits. More selling than buying means a crash or a correction, right? So, and I think that we were so overextended because no one was spending their money, and they're all investing it all through the winter in the Northern Hemisphere anyway. And we all come out of lockdowns wanting to do things and realize that, hold on a second, going to the pub, doing this and that and the other, going taking the kids here and there, needs money. I'm going to take a bit of profits. I'm going to cut a few things, even though I didn't catch it at the top. I'm still going to cut, even though this thing's crashed. And that's what happens because people are scared that they'll go into negative in their position, which is crazy, and or they sell anyway with a negative position. So you just don't know what's going on there on the collective whole, but we can see it on the charts, and we can see that there is heavy selling, and it's still heavy selling, and we just need to wait and see what happens next. I've been Jared. This has been Crypto Plan. Hope you found this one informative, and I'll catch you on the next one. Bye now.